Good morning, traders. Richard here doing quick Ichimoku cloud chart market review of Robinhood markets. I've got the 4-hour Ichimoku cloud up here, and the most recent swing trade generated by artificial intelligence had a nice 112% return roughly. We also combine the AI engine with the Ichimoku clouds, and then we get some other buy signals here. We can see there's another cloud chart, classic cloud chart, cross buy signal there, and the turning line and standard line crossing there, as well as the actual cloud cross buy signal there. So those two trade 65 and 73% on average there. So fantastic rally now, getting a bit extended from the top end of the cloud. We look at the price, where the price action is relative to the top end of the cloud there. So we could see a bit of a consolidation going on here. But keep an eye on the standing line is your line in the sand. You do not want to trade Robinhood below that zone here for this particular rally. So that's kind of a trailing stop is just below that standard line of the Ichimoku cloud, and the turning line still giving support there. But once we're starting trading below the turning line, we could see that base form here and a flat level out with respect to the bottom end of the turning line and the top end of the front end of the cloud. So these are key support zones. So far so good for Robinhood, but do remember this is a momentum stock at the moment, because if we look a little bit at the delve deep into the valuations, the relative valuation rank is 8 percentile ranking. So it means the stock's very expensive. It ranks in the bottom 10% of the market in terms of relative valuation. So it's pure price momentum at the moment. Price momentum rank is 83. It's in the top 20% of the market. So we do expect a bit more price momentum coming through, but do realize we're not buying this on a valuation basis. Intrinsic valuation is 4, the fourth percentile rank. So it's in the bottom 5% of the market in terms of intrinsic valuation. So do realize that there's quite a lot of expectations in the stock, and we can see where the relative valuation ranking, the price earnings ratio and the price to book ratio there, price to cash flow, EV to EBITDA, there's also a very high ratio. So you can see it's a very expensive stock. But also the other problem here is insiders. If we're going to rank the insider buying and selling, that ranks in, let's say, the bottom percentile rank of 23, tells you that not even the insiders are aggressively buying the stock at the moment. So there is a certain risk in the valuation, and then we could see a bit of a consolidation sideways, moving, form a new base and then break out from that base. But do realize that we're only really trading it because of a price momentum basis here. We're not looking at from a valuation and momentum or intrinsic valuation basis, because that's in the bottom lot of the market. Now, interestingly enough, the current, if you're going to do a reverse discounted cash flow and look at what the price is implying of the market implied growth rates for the next couple of years, it looks like the current price, where you now do a DCF valuation and you reverse engineer the growth rate basically by inputting the stock price in the model, then we come up with a market implied growth rate of about 20% per annum for the next couple of years. So it's not too difficult to achieve for the kind of nature the business is in. But do realize that there's still there's still a significant risk in this name, purely on a valuation and a valuation momentum basis. But price momentum score very highly, so we're trading that on the back of that, and together with the AI signals here, giving us nice strong signals, and just keep the trailing stop loss just below the standard line of the Ichimoku cloud on the 4-hour chart. Until next time, thanks for watching, and happy Ichimoku cloud chart and AI trading. Bye for now.